Hi, this is Judith with the market report for the coming week. The preceding week provided a great deal of news to digest, and modern-day extraordinary policy decisions of the central banks make for volatile reactions, making the life of a professional trader unpredictable to say the least. The decision of the ECB to enter negative territory on its deposit rate is a case in point. The euro dropped on the ECB news only to surge ahead and end the day higher. All the measures Draghi could use he did, short of QE, which he affirmed he would be prepared to consider if inflationary steps fail, and yet the euro resisted. Whether this was a day trading phenomena, lack of liquidity in the Forex, or a disappointment that the measures didn't go far enough is unclear. But what is clear, that many analysts are confused by euro strength, especially in the light of news from across the Atlantic. It seems any decline in the value of the euro may be slow to take effect. After the NFP's encouraging news for the American economy on Friday, the euro saw a pullback from its critical level of 1.3666, shown here, and now sits seemingly ready to retest it in the week ahead. Monday's trading may give a further glimpse of how the market has digested all the news and provide some direction. The news in America was one of steady growth, with the Federal Reserve much closer to raising rates than the Eurozone. With unemployment rates falling faster than expected and 4 months of straight gains in jobs numbers, the economy edges towards recovery. It will be interesting to see if the data is reinterpreted as favouring earlier moves from the Fed, which could drive the dollar up. The reaction on the news was for an initial drop in the dollar as the market saw the numbers as bland. It did recover a little ground in late Friday session. For the majors in the week ahead, the sentiment and thus the direction will have to be gauged in the week ahead during Monday's London and New York sessions. The Bank of England kept interest rates steady this week, showing signs of recovery in the UK, making it ever more likely to raise rates before the ECB. This would bring an expectation of a continuing downtrend in the euro pound. The chart there showing the downtrend, the current downtrend on the daily chart. The news from Switzerland with increases in the CPI, which may favour an uptrend in the USD CHF. I'll put that chart up, and I've shown the supply zone. So I'll be watching for the break of 0.90390, which is round here, which is the break of that supply zone. That's been holding price since February. Canadian news was disappointing, with employment falling, inflation targets not met. Let's put the USD CAD chart up. This makes the USD CAD an attractive buy at 1.09600 after the NFP comparison. Okay, the Australian dollar has broken the weekly uptrend, so any downtrend direction established on a 4-hour time frame should provide short entries. The AUD yen steams ahead, but it's close to a daily downtrend, which I shall watch for a resistance or break. Japanese GDP is announced Sunday night after this report. After last week's news, I favour the USD CAD, it's my favourite, and the Euro Pound, which I've already shown. Important employment news from the UK on Wednesday may clarify the Pound USD direction. Australia follows on Thursday. Another interesting but perhaps more reflective than reactive week ahead.
Okay, well done. Fotis, any comments?
No, I'm impressed with Judith. I said we have been talking with her, I think, 1 week now, and we began by explaining how to look at fundamentals, and she was very good at technical analysis already, so it was a case of showing her where to look for opportunity. So by doing this fundamental analysis, she understands the structure of the market, she understands what is happening, what is affecting the moves, and she knows where to look for opportunities. She doesn't have to look at 20 different markets and look specifically for technical patterns. She is focusing on what matters in the market, and then she is applying her technical analysis. We have, of course, we will continue improving this. We have lots to learn about intermarket relationships, but I think we are on a very good way. Her analysis is very good, and now it is important to see, even in more detail, how the fundamentals are affecting the currencies and what is the impact on our risk and on our reward.
Yeah, I think one comment I would make, I think that I would have a bit more of a either-or scenario, because for example on the Swissy you were talking I think about a break above, Judith, but I think you also need to consider possibility that it might well bounce back down again. So to me that is the line in the sand for sure, and you pick that out to the pip.
Yeah, this one I said if it broke above or came below, that one's not clear. To me that's
Yes.
not clear. The fundamentals gave me a bias. I have to admit that I've got to overcome that, because that's a difficulty, because now I'm not inclined to look at the side that doesn't support the fundamental theory.
Yeah, well the thing is, I mean what I say to people is if you're in an unsure environment, I mean ultimately if you're unsure you just walk away. But the way to do it, one of the ways to do it from a technical perspective, is you look at it and you say, you use what's known in sales as an Abe Lincoln close. And an Abe Lincoln close, if you imagine a pair of the old weighing scales where you've got the weight on one side and then the item on the other, the idea with an Abe Lincoln close, and from a trader's perspective, what you do is you say, okay, write down in the left-hand column all the reasons why I want to long this pair. But then change hats and say, okay, you know, you're a trader who's looking in this area to short, and write down all the reasons why you want to short. And if the scales are equilibrium, then walk away. If there are more reasons to long than to short, then you take the long. And if there's more, you know, so kind of try to always be flexible, because the main thing of that pair, I'll be honest, I haven't put that trend line in. When I was looking at this morning, I was looking as Fotis was for a potential reversal back down, because it's a triple top. There are other possibilities here, that it could be an inverse head and shoulders, it could be lots of things. So the thing is, if you imagine that you were working in a financial institution or in a bank, I have friends who worked in banks for years, and they would be on one desk. So they would be on the Euro USD desk, for example. So whereas we have the luxury now of being able to switch between 30 currency pairs, they have one pair. And they have to work every day on a basis, well, if it does this, we do that, and if it does that, we do this, because ultimately they still have to buy currency. I think a lot of people, novice traders, forget about the fact that actually what's going on here is that money, cash, is just a commodity. It's the same as buying coffee or whatever it is that you're buying. It's all about supply and demand. And so a trader in a bank, if he has orders to fulfill to buy X million euros today, he's going to have to buy them. And therefore, say, if you're running on one pair, you'd have to be more thorough in terms of, if it does that, I'll do this, if it does that, I'll do that. I think what you did was very good. I said to you, the way it was written was excellent, and when I read it, it sounded like a broker's note.
So by looking at the fundamentals, we have an idea of what we are going to do, but the key thing is that we must be prepared for any scenario. We should not be biased for just one outcome. We should not have expectations of what the market will do. We should just leave the market to speak for itself.
The strange thing is now I can't look at a chart technically anymore. I'm curious to know what's going on behind it. I spent my Sunday with my head buried in the FT, which is interesting, because there are always drivers for the market that we watch and we wait and see what's going to happen, but there's always a reason behind whatever's happening. And
Yes.
now I want to know what the reason is, and that's within a very short period of time, because I was purely technical before then.
Yeah. This is taking it to another level to actually understand what's going on, into correlation with other markets. The things I've I've been trading 10, 11 years and I didn't know about it. And I still managed to make a good living and make decent money trading for other people. But I kind of start to realise now how much better I could have done if I'd had more knowledge of the fundamentals. So I think, yeah, to be an all-rounded trader, if you want to do this professionally, you want to do this properly, manage money and manage your own accounts, and I do think that, well, I know that you need to grasp all of this. And the final bit is the psychology, because as we discussed before, most people in my experience fail because they can't. It's the psychological issues, you know, and you can shout about patience and discipline until the cows come home, and people don't do it, and I didn't do it. You know, I was the worst trader in the world for the first few years, because as a retail trader, there's nobody looking over your shoulder, and you lie to yourself, you know, and you just, oh, I had a bad loss and forget and try win more back or whatever. So I think the psychology of it as well is so important, because it's not just now where you're learning the fundamentals of this, and we all have psychological issues anyway, but the bigger psychological challenges that come along is if, for example, you are trading now on a $10,000 account and you're used to the risk element, if suddenly you were offered the chance to work on a $50,000 account, a $100,000 account, then there is a mindset that you need to develop to be able to do that, because I went from trading my own account at 50, 60,000 to working for a fund where I was trading $1 million. Well, the spread alone on some pairs, I remember the spread on the pound yen, you could place a trade and the spread was 10 grand, 15 grand. So it's quite scary, you know. So the whole overall package for the whole thing for me is the fundamentals, the technicals and the psychological.
I've really found it's been totally illuminating. This first week has been awesome.
Good. All right, I'm glad you've enjoyed it. Thanks everybody for your time this morning, and we'll meet up later in the week. Have a good day.